Let's get more on the markets now with Richard Perry in London. He's an analyst at Hantec Markets. Good to have you back, Richard. Let's start with the US-China trade war. As we know, US President Donald Trump has really escalated those tensions. Tell us a bit more about how investors are feeling on that front.
Yes, well, there certainly has been a complete change in market sentiment surrounding these trade talks. Trump sent out these tweets on Sunday and just threatening the escalation of the tariffs. Now, the markets were originally sort of looking at this and thinking perhaps it was just a trade negotiation tactic, but it certainly looks as though today that the revelation that China has significantly backtracked on some of the negotiation agreements, and that has really put markets back into a bit of a negative sentiment outlook. We've seen that we've got with classic safe haven tendencies through these markets now. We've got volatility pulling sharply higher on US markets, equities falling. We've got the safe haven plays of the yen and US Treasuries doing well. So some significant reversal in sentiment. Now, these trade talks are going to be key this week because obviously if China does continue to underestimate how the US responds, we could still have the all-out trade war that Trump has threatened, and it may not just be a negotiation tactic. So some serious diplomacy will be needed, I think, from the Chinese delegation this week in the US.
Yes, and the first appearance of the new royal baby has really overshadowed British Prime Minister Theresa May's latest appearance in the UK Parliament. What's the latest on the Brexit front?
Well, Brexit is dragging its feet, to be honest. For the last 6 weeks, the Conservative Party have been negotiating with Labour to try and come to a deal to drag Brexit over the line through the Parliament process. And it doesn't seem to be working out all that well. Sources on the Labour side suggest they're still a million miles apart on coming to a customs union agreement. Now, this is key because the Conservative Prime Minister Theresa May promised her MPs that she would resign come the end of the agreement on Brexit. Now, the agreement doesn't seem to be coming through. Now, these MPs are getting increasingly nervous ever since these local elections had a dreadful turnout for the Conservative Party last week. And how they respond to that, they could again try and push her through with a vote of no confidence, and changing the rules on that could be crucial to that in the coming weeks. So how she survives in the coming weeks will be a key factor, I think, for markets, because it could potentially put a Jeremy Corbyn-led socialist government closer to power, and that could be very negative for UK markets.
Okay, Richard Perry in London, thanks as always for your analysis.